Howdy, everybody. Welcome to Liberty Call. Today is Friday, February 2nd, 2024. I hope everybody's having a fantastical week out there in the interwebs. It's kind of gloomy here in Colorado. It's a little overcast. We're expecting that big snowstorm, which, we were supposed to get snow today, but it may not be until after midnight. But according to the forecast, I think I have about a 70-something% chance of 6 inches or more, and so somewhere between 6 and 10 inches seems to be the what AccuWeather's saying. So anyway, so I don't know what you have in what your plans are for the weekend, but mine are probably clearing some snow and staying inside and watching some college basketball. The Cougs play tomorrow in Kansas. Woohoo! They're going up to Lawrence and hopefully take care of business. They beat the Longhorns the other night, which was nice. So anyways, all right. Well, if it is your first time watching Liberty Call, if you could do me a favor, if you could give me some thumbs up, a like, a share, subscribe, follow, and press that damn notification bell. Right, folks? All right, let's go ahead and get into today's numbers and see how they turned out. Market was obviously in a better mood. Dow Jones was up 0.35%, 134 points, closed at 38,654. S&P 500 was up 1.05%, closed at 49.57. NASDAQ up 1.74%. Real big bounce back from a couple days ago. Closed at, or it was up 1.74%, closed at 15,628. The VIX fell 0.14% today. It's at 1386. Canada was down 0.16, Brazil was down 0.93, and Mexico was up 0.2%. Over in Europe, Germany was up 0.35%, the UK down 0.09, France up 0.05, Netherlands up 0.05, Spain up 0.48, Italy up 0.09, Switzerland up 0.23, and Portugal down 0.45. Both Russian exchanges were red today. MOEX down 0.02 and the RTSI down a third. And the overnights in Asia, the Nikkei in Japan was down 0.3%. Australia was up 1.47%. New Zealand up 1/3%. In China, the Shanghai was down 1.46%. The Shenzhen component down 2.24%. China A50 down 0.88%, DJ Shanghai down 1.72%, Hang Seng down 0.21%, and the Taiwan weighted was up 0.51% for the day. All right. So let's go ahead and take a peek at how the markets did for the week. Starting out with the Dow Jones. All right. Looks like, yeah, there we are. No, was that it? No, that was Wednesday. Wait a minute. Where are we? We're in the wrong damn part here. Let me drag this over. Let's look at the 1 week. All right, here we are. Okay. All right, looks like the Dow Jones is going to finish the week up 1.37%. Not too bad. The S&P 500 looks like it's going to finish off up 1.49%. The NASDAQ finishes the week up 1.2%. The Dow Transports finished the week down 0.27%. And the Dow Utilities... start there. Looks pretty flat, up 0.06. So looks like the major indexes, the Dow, the S&P, and the NASDAQ were up about 1 to 1.5%. And then these minor indexes were flattish for the week. All right, let's get that off the screen. And let's go ahead and move over to the economic data that came out this week. Starting out with jobless claims, they came in at initial claims came in at 224,000. Forecast was 213. Last week's number was 215. Continuing claims came in at 1.898 million. Forecast was 1.84. Last week's number was 1.828. So it looks like it grew by about 70,000. The consumer confidence came in at 114.8. Forecast was 114.2, so just a little over forecast. Last month's number was a 108, so confidence has been climbing the last 2-3 months. The house price index year over year grew at 6.6%. Last month's number was a 6.3, and on a month-on-month basis, grew by 0.3. The forecast was 0.2, and the previous number was a 0.3. The ADP non-farm employment change grew by 107,000. We were forecasting 145,000. Last month's number was 158,000. The ISM Manufacturing Purchasing Managers Index came in at a 49.1. Forecast was 47.2. Last month's number was 47.1. So pretty big jump there. I know I covered this in an article either yesterday or Wednesday. It was released yesterday, so probably in yesterday's broadcast, talking about the exuberance or the positive light, even though it's still under 50, it has been climbing up here of late. So people are pointing to that as good news. The U.S. Federal Reserve balance sheet is currently sitting at 7.63 trillion. That's trillion. The previous number was 7.66. I'm sorry, 7.677. And so you can see before the whole coronavirus thing, we were sitting around 4 trillion-ish, jumped up to over 7, and then up over almost nearly 9 trillion, and it's gone down a little bit. So the peak was around 8.9-ish. 9 trillion, and we're down to 7.6. So it's it's getting there. They never sell the stuff off faster than they buy it. U.S. Nonfarm Payrolls report came out today, came in at 353,000. We were forecasting 187,000. Last month's number was 333,000. The unemployment rate came in at 3.7%. Everyone was forecasting 3.8. Last month's number was also 3.7. And the labor participation rate stayed steady at 62.5. We were forecasting 62.6, and last month's number was 62.5. All right, so I think that's all the data. Was there anything else? Nope, that was it. That's all the data that was came out this week. So again, the numbers look good. It's kind of if you're a financial journalist, you can cherry pick everything. Oh, this is fantastic. Look at this. Look at that. Everything's fine. It's not. So, all right, let's get to our market recap. U.S. stocks rally on blowbacks. That looks like a misprint. U.S. stocks rally on blowjobs report, probably a blowout jobs report. Meta-led gains in big tech. So investing.com, Miss Yassine Ibrahim, or Mr. I'm not sure if that's a boy or a girl, but that's probably not how you want to title your article. I didn't notice that until now. All right, let's go ahead and get to the recap, get to my summary here. All right, U.S. stocks rallied on Friday, propelled by strong quarterly results from Meta Platforms and a robust jobs report. Yeah, robust jobs report. U.S. economy added 353,000 jobs in January, surpassing the expected 187,000, while the participation rate in the jobs market slightly decreased. Actually didn't change. Average hourly earnings or wage growth unexpectedly rose by 0.6%, challenging expectations for a decline of 0.3%. The stronger than expected wage growth created uncertainty about the the potential timing of rate cuts. Again, not happening anytime soon, with some suggesting a delay into the latter part of the year. Meta stock surged 15% after the tech giant announced its first ever dividend and a $50 billion share buyback following a tripling of quarterly profit from the previous year. This move is seen as an effort to attract dividend-seeking investors, according to UBS. Amazon Inc. rose over 7% as its fourth quarter results exceeded Wall Street estimates, driven by growth in its cloud services and e-commerce strength. On the other hand, Apple initially declined due to lower than expected iPhone sales, particularly in China, where the company faces competition from Huawei and geopolitical challenges. However, Apple shares rebounded as optimism persisted about potential upgrades from users of older iPhone models in China. And also on TV, they were showing Apple, their new goggles or glasses or whatever, $3,500. I know I'm stepping away from the recap here, but $3,500 for VR glasses? I'm sorry, that's just, unless they wash your car and do the dishes too, I just don't see the point. All All right, jumping back in, Intel Corporation fell more than 2% after reports that the chip maker was delaying the construction of its semiconductor factory in Ohio, citing market challenges and slower than expected government grants. Boy, there's a shock. Government moving slow. In the energy sector, ExxonMobil Corp and Chevron rose after better than expected quarterly results, benefiting from higher production that offset the impact of falling oil prices. The positive earnings report from major companies contributed to the overall optimism in the stock market on Friday. All right, so everyone's feeling like they're in a decent mood right now. On to the next article here. It comes from Yahoo Finance. It's titled, "A Strong Jobs Report Complicates Jerome Powell's Political Dilemma as 2024 Election Nears." What does that mean? All right. Federal Reserve Chairman Jerome Powell faces increased challenges in navigating monetary policy amid a robust U.S. job market, as a stronger than expected January jobs report complicates the outlook for potential interest rate cuts. The U.S. economy added 353,000 jobs in January, well surpassing the anticipated 187,000, leading to discussions about when the Federal Reserve might consider rate adjustments. Not now. Powell, who had already hinted that a rate cut in March was unlikely, finds himself on a delicate path, with political pressures intensifying. Former President Donald Trump, a vocal critic of Powell, suggested that the Fed chair might be attempting to lower interest rates for political reasons. Despite Powell's repeated assertions of the Federal Reserve's independence from political influence, he faces scrutiny from figures on both sides of the political spectrum. And let me stop here, Mr. Orange Cheeto Trump. We're going to go over here to the Fed funds effective rate chart. And we can see here that rates during the Trump years were going up. We were at zero when Black Jesus handed things off to Trump. And then by the time, let's say March, May, I'd say by about June, July, we had peaked out at about 2.4%. Well, strangely, the repo markets and the, basically where the Fed, how they juggle the books for all the banks behind the scenes on the overnights, those repo markets were just out of control at the time. And that was a big story. And what happened, and also the election was coming up in less than a year, the rates started dropping during Trump's presidency. Again, I'm no Biden fan. I like to see that guy shot out of a cannon. But, I'm sorry, Trump. Rates were going down to help save the economy so that you could get reelected. And I would argue that all this Fed money printing, somebody got in your ear and told you, hey, this is going to fix all your problems and get you reelected. But we know it didn't happen that way. All right. So let's go ahead and jump back into the article. Where was I? Oh, there, Trump. All right. The unexpected strength in the job market reflected in the January report has spurred debates about the timing of potential rate cuts. Analysts are now speculating whether the Federal Reserve might delay any considerations of rate cuts until the second half of the year. I think somebody said that yesterday or the day before, possibly in July. Notably, July is a significant month, closely tied to Election Day, and when Powell might face heightened attention from various political quarters. The positive momentum in the jobs market and the economy's overall health pose challenges to the Federal Reserve's previous expectations of multiple rate cuts in 2024. Powell has consistently emphasized the need for sustained evidence of inflation moving towards the Fed's target before entertaining the possibility of rate cuts. And we talked yesterday about how inflation is starting to kind of build back up again. And if that starts to spike and they're lowering rates, that's just going to cause way big problems. That's a terrible sentence. I don't know why I said that. Where was I? The recent jobs report beating expectations may contribute to a shift in the Federal Reserve stance, possibly leading to a delay in rate cuts. Investors who had initially anticipated potential rate cuts in March are now adjusting their expectations. Some now believe the first rate cut might occur in May, reflecting the evolving economic landscape. Powell, a Republican, continues to face criticism from Trump and other Republicans, as well as pressure from Democrats advocating for rate cuts to assist homeowners grappling with high mortgage rates. Oh my God, people are paying 6 and 7% on their mortgages. Oh my, cats and dogs living together. It's anarchy everywhere. As Powell maneuvers through these complexities, he emphasizes the Fed's focus on fulfilling its responsibilities in what is anticipated to be a highly consequential year. Yeah, every election is consequential. The central bank's decision-making process amid economic data fluctuations, political pressures, and divergent expectations underscores the intricate challenges Powell confronts in steering monetary policy. Yeah, poor Powell. He created this mess. I think you should have to deal with it. So, all right. And I got one last thing here. It's a podcast. This was from last Friday or Thursday, somewhere around there. I listened to it last Friday. It comes from the Brian McClanahan show. It's titled Texas v. Biden, and it's a good listen. So we're just going to listen to a couple of minutes of this, and then we'll go ahead and break for the weekend. So let's go ahead and I'm going to mute my mic so we don't get any feedback, and we'll get started.
Issues to talk about. I was going to hold this off for next week, but the showdown is happening today as I'm recording this between the federal government and Texas Governor Greg Abbott. So we need to talk about this issue of Texas v. the United States. This is huge, ladies and gentlemen, and it's huge because for the first time since really 1798, we have a real issue of nullification. Now, we know that everyone's framing this, I should say, as an issue of 1860-61. But what's really happening here is we have a nullification crisis again. And I'd say it's different than any time since 1798 because you've got a number of states now that are rallying around Texas. Now, in 1832, it sort of happened. There were other states that would have joined common cause with South Carolina, but of course, South Carolina said, yeah, we don't care what you say. Supreme Court can say whatever they want. We're still nullifying the tariff. And in this particular case, we've got a situation where the state of Texas has said, you know what you're not doing? You're not enforcing the laws of the United States. This is kind of a reverse of what was happening in 1798, where the federal government passed a law. Virginia and Kentucky said that law is unconstitutional. We're not going to enforce it. Same thing in South Carolina with the tariff. You might draw some conclusions with the sanctuary cities or maybe the personal liberty laws, which would be a federal law was not being enforced by the states. But in this particular case, this is so unique because in this case, the federal law is not being enforced by the federal government. So the federal government is delinquent here. The federal government, the President of the United States, is not enforcing the law. In fact, he's violating his oath of office, which means he is committing an impeachable offense, and he should be impeached immediately if the Congress was going to do anything. And I've seen a lot of hot air about this. Well, you know what's going to happen if Biden does this. What we're going to do in the next session is defund these things. No. What they should do immediately is impeach him. Call an impeachment vote. The president has violated his oath of office. That's it. I mean, this is it. He has violated his oath of office by not enforcing the laws, by saying that the Texas National Guard, first, and I'll get into some of the legal part of this as well, by trying to federalize the Texas National Guard, and then by saying we're going to use them to open the border and allow illegal immigrants into the United States. He has 100% violated his oath of office and immediately should be impeached and convicted and removed from office. It is one of the most egregious violations of the Constitution you can think of when the president simply openly says we're not going to enforce federal law. That's his primary job. Now, if the law was unconstitutional, well, then you can make a case that he doesn't have to enforce the federal law. But in this case, is it unconstitutional or is it not unconstitutional? We're going to get into all of that. Is federal immigration law unconstitutional? If it is unconstitutional, then the states have a primary responsibility to do exactly what Greg Abbott in Texas is doing and try to stop immigration. So there's so many layers to this, and it can be a little confusing. Now, years ago, I did talk about immigration policy, and it is really up to the states. However, the 14th Amendment had some interesting language on this, and even the Kentucky resolutions themselves, which Jefferson wrote, allude to federal policy when it comes to immigration. Okay, so you have a lot of things happening here, and there's been some arguments about Article 1, Section 10, et cetera, et cetera. You have some arguments about the 10th Amendment. There's so many things going on. So let's just break down what's happening, at least in terms of the news. We all see it. We all know it. The southern border of the United States has been wide open now for nearly 4 years. The Biden administration has put in a welcome sign. All are welcome. Just come on over. The flood of immigration is tremendous. I mean, it's gotten to a point where it is literally an invasion. There are people entering the United States unchecked. The Border Patrol is doing nothing. It's catch and release. They catch them, they say, where are you going to go? And they send them off. There is no enforcement of immigration law at the border. People are being arrested and released. And nobody's really being deported. And I know that there are stats out there, wait a second, McClanahan, people are being... It's a failure. Our immigration law on the southern border is an abject failure, and it's done on purpose. It is a willful attempt by the Biden administration to ignore the law. That alone is an impeachable offense. Okay, that alone, because the law, if you want to follow precedent, is not unconstitutional. Now, is it unconstitutional when it comes to the original Constitution? So let's get into all the layers of the legality of this, because I think that's very important. You're going to have a lot of left libertarians say immigration is a human...
All right, we'll go ahead and stop it there. Again, it is a really good podcast. I listen to Brian every week. He is fantastic. He is a professor of history, and especially focusing on Southern antebellum history. And so he knows his stuff. So anyway, so give that a listen. It's about, I think about 30 minutes, most of his shows. And I usually listen to it at about 1.5 speed. So I can knock those out pretty fast. But, like I said, with all the things that kind of cooled down this week, I know last week, this was a big, big subject about what's going on down at the border and, convoys going down there. And I mean, personally, I think this could be one of the tipping points that ends the 50-state republic as it stands. By 2030, I don't think we'll have a United States, constituted as it is right now. I think we'll have at least two. We'll have like a left and then a right, and there may be more. I mean, it may be broken up into 3, 4, 5 separate republics where the states choose, who they want to align with. So I'm totally fine with it. I mean, who wants to share a government with people that hate you? I mean, I wouldn't want to do it. So I think that's probably the best way to go about it. But anyways, all right. Well, that's everything I had for this today and the week. I hope everyone has a fantastical weekend out there. And if you need anything from me, please go to dsafinancialgroup.com. All my contact information there. Like I said, I hope you have a great weekend, and I'll talk to you next time. Adios.